Aloha, YouTube. How are all you investors doing today? My name is David Yanson. Welcome to my channel. Today is October 14th. It is Wednesday, 2020. We are looking at my Fidelity account. I did just do a video of Bank of America's earnings, so because it is earnings seasons now, I'm going to be doing videos on the companies, not all, but probably most of them. I know I missed Pepsi's earnings. I do own them in this portfolio in my Fidelity account, but I will try to do all the earnings for this quarter 3, or if the company is in quarter 4 or quarter 2, just depending on their fiscal year, how they do their fiscal budget. So I did do Bank of America recently. I am planning on, for this video, we're going to look at JP Morgan and Johnson & Johnson, who released their earnings yesterday. Bank of America did theirs today. Check that video out. Also, subscribe to the channel if you haven't already. And mahalo, thank you to everybody who has already subscribed and continues to support the channel. So you'll see a subscribe button, you just hit that, and then there's a like button, a thumbs up button, you hit that as well too. And also feel free to share with your family and friends if you find the videos informative. So Fidelity says, good afternoon, David. It is almost noon, or it is almost 1 p.m. here in Hawaii, where I live, and as you can see, the U.S. stock market is closed, and the Dow, the NASDAQ, and the S&P 500 all ended in the red for today. Not uncommon for an election year. Election years, the stock market can be volatile, but we have more than just an election year going on this year, 2020. Not the best of years, but not the worst of years either. Just lockdown economy, stay-at-home economy. Not the favorite of a lot of people, especially if you're an up-and-go type person. So, and here in Hawaii, where we've got beautiful beaches and we thrive on tourism, it has hurt our local stay-at-home economy, has hurt our local economy here. So, as a lot of restaurants and small businesses have gone out of business. So, but on the bright side here, Fidelity does say good afternoon, which is a nice way to be greeted when you open up your portfolio. And the other thing that I like about Fidelity is they do give you a lot of news and information here. They give you a lot of videos that you can stream through as well too, but we won't go into looking at Fidelity. I do have videos on Fidelity's pros and cons, why I switched to Fidelity, because I did have 2 accounts with M1 Finance. Now I only have my Roth IRA with M1 Finance. My M1 Finance video buy will be tomorrow, and I will show you how that Roth IRA is doing as I'm getting closer to the $6,000 contribution limit. My other portfolio is with Robinhood, so I have 3 portfolios. Robinhood is my growth portfolio. I have videos on that as well too. Check those out, and I do have playlists with everything organized for you so that you can click on any of the playlists if you want to see those individual videos. And I do have some smaller brokerages there that I signed up just for the free stocks if you're interested in that. The links are in the description where you could click on my referral link and get free stocks with either Webull, Doe Finance, Public Investing app, and I believe there's one other one that I have in there that I can't think of off the top of my head that you'll get free stocks with if you sign up with Robinhood, of course. So looking at my account here, I did kind of go through this in my previous video of Bank of America, so I kind of just want to go right into the earnings of JP Morgan and Johnson & Johnson that we're going to look at today. If you're not familiar with JP Morgan, they are the largest U.S. bank. The bank is saying, and this is me getting information from the Wall Street Journal and Forbes, that profit rose 4% from a year ago for this quarter, which is really nice for a bank. My personal opinion, and I mention this in almost all my videos, I only own 3 banks. I'm very skeptical about the banks. The one that I own and I do kind of like, even though the stock doesn't trade very well, is People's United Financial. They are a regional bank. I own them in my Webull account. I have almost 20 shares of that bank. It's doing relatively well, but they are a dividend aristocrat, and that's why I like that bank, as they have a sound balance sheet as well too. So JP Morgan did say that they got a boost from their corporate and investment bank, where profit rose 52%. And then as far as other numbers are concerned, with JP Morgan's quarter earnings, they are saying that revenue for this third quarter was just under the $30 billion that they did at this time last year, at $29.9 billion. So they just barely missed that, which I still think is great. I still think that, $30 billion, $29.9 billion, $30 billion, that's not, for JP Morgan, that's kind of chump change, I guess you could say. So per share, that put them at $2.92 per share, which I think the consensus was $2.23 per share, which puts them above what they were expected to do. So as far as credit losses and expected losses from delinquency and bad debt, surprisingly, this was one of my concerns with the banks during this recession, was that credit losses and delinquencies or bad debt would be bad. But JP Morgan is saying that their net income was good enough that those losses were decreased by 60%, which that's good news. That's really, really good news. So, because that was my concern, is that small businesses wouldn't be able to pay their bills, and other people who had loans with some of these banks, and a lot of people bank with JP Morgan and Bank of America, that they wouldn't be able to maintain their regular payments, and there could be defaults and delinquencies. But JP Morgan is saying that that hasn't been that big of a deal for them so far. So that is JP Morgan. I do own 2 shares of them. I'm probably not going to add any more to them unless maybe they drop down to like $95 or $96, somewhere around there. Because, yes, I am still skeptical. And I really only own banks, just these 3 banks, just because of the diversification. You know, I would like to maintain a very well diversified portfolio. So also Johnson & Johnson, I did read an article where somebody was saying that they believe that you should only buy J&J on the dip. Personally, my opinion is, and all my videos basically are my opinion because I'm not a financial advisor or an accountant or an economist, but I get a lot of my information from articles that I read, sometimes Seeking Alpha, sometimes Market Watch, sometimes CNBC, and just a variety of things that I scroll through on the daily for the most part, for sure 4 or 5 times a week. Johnson & Johnson is a dividend king. They've been increasing their dividend payments for over 50 years. My personal opinion is have them as a staple in your portfolio. They are such a well-diversified company between pharmaceutical and everything else. You know, the Band-Aids, the soaps, the baby powders, all that type of stuff Johnson & Johnson has. And yes, they are having to repay with opioids and the baby powder and stuff like that. But you know, their market cap is crazy. They bring in so much money in revenue. They're a really, really well-run company, so I'm not concerned about that at all. So I do expect, and there will be another dividend increase from them as well, so that will be a pay raise that I will get from Johnson & Johnson. But as far as their third quarter earnings and revenue, their adjusted earnings, $2.20 per share, which is higher than the $1.98 per share that was projected by other analysts. The company did generate over $21 billion in revenue, which is higher than expected. Some analysts were expecting $20 billion, $20.2 billion. So, and that is up from the $20.72 billion from last year. So really good news. And Johnson & Johnson is giving full guidance for the year. $7.95 to $8, or a little over $8 per share, somewhere in that range. And it's also saying its sales forecast to range of 82 billion, in between 82 billion and almost 83 billion. So really good news for Johnson & Johnson. They are working on different treatments as well too, where they have they're in late stage trials with. Who knows how those are going to pan out. But, you know, they're so well diversified, and they are a dividend king, my personal opinion. Put Johnson & Johnson. I'll be adding more to Johnson & Johnson, not so much just because on the dips, but I will just always kind of add to this company as I really, really like them for long time investing. So I hope everybody has a great day. Be safe and healthy out there. Mahalo and aloha, everyone.